Well, hi everyone. Welcome to the Buffett and Beyond Saturday ETF report. And today we're going over the Finance ETF, and we're recording from the screen. That means we'll get a lot of interruptions, which you won't see, but I'm editing them. And so the voice might not be in tune with the picture, as you'll see as we go along. It's pretty funny on this end. It takes more time, but this is easier to see because we're going to go through the computer program. So again, we're going over the Finance ETF, which is the XLF, and this is July 12th, 2025. And remember, folks, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And let's look at a chart of the XLF for the past 1 year. And we're starting at the lower left and going to the upper right. Yeah, there's been a lot of interruptions in between, but that's how you look at a chart. What's going from the lower left to the upper right? Well, the finance sector or the financial sector ETF. But it kind of looks like down here there's going to get a little sell signal, a double higher high up here, a lower high here, but that's not what we're talking about. We're looking at the entire XLF for a buy and hold, and we're going to go to the computer program and see how we find that. So here we are at the Buffett and Beyond homepage, buffettandbeyond.com. We're going to go to the subscribers locker, click on that, and we're in the subscribers locker now, and we'll go to the ETF and individual stock database. And we'll click on that. Individual stock database, click on that, where it says click here. Now, with this slide, you have to go all the way down to the bottom, down here where it says click here, and that's where you have to click. But when you're in the full screen like this, you don't see that, and you'll come down here, and you'll want to do, like I want to do, click on something that's larger. And we tried to get this moved one time, but it just didn't work. So anyway, go to the bottom, you'll click here to the access to the ETF. Now the difference between the different subscriptions is not all, if you're not subscribed to the ETF sector, you won't see this ETFs over here. You'll see all stocks, and you'll get about 500 or 600 stocks. But with the ETF, you get almost 1,800 stocks, and this magic button right here, folks. So you click on that, and you come to the ETF page, and you can put the symbol of any ETF in here, and it'll come up, or you put any stock over here, and it'll tell you which ETFs they're in. But right now, we don't have to do that because we've got our main ETFs listed here. And we're going to click on XLF Finance right there, and we'll click on that, and it brings up the XLF Finance stocks. So we'll come over here to projected 2026 ROE. We'll click on that once, twice, and by clicking on this, you go from either the highest to the lowest. In this case, click on it again, you go from the lowest to the highest. And we don't want the lowest to the highest, and we're talking about the clean surplus return on equity, or we go here and we go from the highest to the lowest. So what we're looking at is Blackstone, and we look across here, we say, look, we've got pretty good return on equity all the way across. Apollo Global Management, pretty good all the way across, a little in here, but it's still pretty high. And in other words, what we're going is we're just going to go find the top stocks that are over 20%. And the next one is Erie Indemnity, which we have in our portfolio. That we have MSCI, Arthur Gallagher, which is in our portfolio, CBOE, MasterCard, and BlackRock. And then we fall to Visa, but we fall below 20%. So we're going to look at these top stocks that are 20% or over and say that's our portfolio for this year. Now, if you want to go to, say, Erie, just click on the Erie and you'll get the portfolio chart, or I should say table, that we're all familiar with. And look at the net income. The net income has been going up almost every year, at least since 2020, all the way up each year. And we look at the clean surplus ROE. Yeah, it's been high every year. So this is a pretty decent stock. Only problem is that for 2026, the 5-year net income growth rate is only 7%, which is below the average stock, and the revenue growth is 2.3%, which is below the average stock. So Erie just came out with new numbers, and we do have it in our portfolio, and that's the problem right here, is because it has dropped down in the past year, but we'll see that on the charts. So that's how you get there. Then you come over here and click this button, and we come back to these stocks. So what we did is we plotted these stocks. Okay, so what we did is I just went to the big charts up here, and you can get there from the computer program. It's all the way in the right-hand corner of the computer program, and I should have showed you that. And we put in the SPX, which is the S&P 500, and we did 1 year, and we put in the top ETFs. And I'll show you why we call them the top ETFs. At first, I put all the ETFs that we had on our computer program and came up with these as being the best, and this is what they've done for the past 1 year. Black line is the S&P 500, and we can see that the bottom line down here, the worst performing ETF, is the XLV, which is the healthcare ETF. Then next is the semiconductor up here, and then the tech ETF here, just under the black line, which is, and again, the black line is the S&P 500. And the top performing one is the XLF, which is the financial. So we're looking at what ETF has performed the best this year, and it's the financial. And don't forget, I did check all the other ones, and these are our top performers, the technology ETF and the semiconductor ETF. So we're looking at the finance because it's been doing well. Now I come back over here, and let's go to 5 years just for fun. So we go to 5 years, and I click Draw Chart, and guess what? Yeah, let me enlarge that. Well, up here, the blue line is the XLK, which is the technology. And then right under it is pretty much a tie for the top spot. So right below them is finance, right down here, and semiconductor. So from top to bottom, very hard to see here. Top one is technology. The next one is the semiconductor. And then just down here a little bit is the finance. So over 5 years, we can see those three ETFs have outperformed the black line, which is the S&P 500. So now we came from the computer program, and remember those stocks that we had in there? Well, it's hard to remember them, but we put them all on one chart, and we went over 1 year. So let's go look at these stocks here. So in other words, if we were going into the finance ETF at the beginning of the year, we would have picked these stocks here, and guess which one has that been outperforming? Well, we don't want to look at individual ones, but the one that's been outperforming is the CBOE, and we're looking at them, and we're seeing that all except one are outperforming the S&P 500. And the average here with the S&P up for 1 year, up about 11%. These stocks are up averaging about 22%. Even with this one down here, which is Erie, we would still be averaging about 21%. So we would be doubling the S&P 500 just by what we did, just by going to the computer program or plotting all the ETFs in our database, which we have on the home page. In other words, these stocks in here. So we put all of those and we plotted them. Well, let's go to 5 years now. So I'm going to reduce this and go to 5 years and hit Draw Chart. And then we come here. So how did these stocks, if we're back testing, so how did these stocks do over 5 years? Black line is the S&P 500. So we can see the stocks averaged about very close to 150%, while the S&P was up 100%. So in other words, it took about, 3 minutes to go to the computer program and find out which were the top stocks in this ETF, the finance ETF, which were the top stocks, and put them in a portfolio. We tested them for 1 year, or how they did this 1 year, and they're outperforming the S&P 500 by almost double. Then we go to 5 years, and we can see they're up about 50% more than the S&P 500. Now, what did our top 30 stock portfolio do over at this time? With the S&P up 100%, our 30 stock portfolio was up about 200%, so it equaled these top two stocks. But of course, we didn't know which stocks would be the top 2 or 3 stocks. So our 30 stock portfolio is about 200% over 5 years, while the S&P is up about 100%. So we're doing really well. But really what I wanted to show you was how easy it is to pick stocks in any portfolio. Let's go back to the computer program just for a moment, and let's go back to the ETFs and just pick the technology stocks. So I'm going to hit technology here, and I'm going to go from highest to lowest. And here we have a whole group of stocks that we consider for our portfolio. And you can pick the top 5 or 6 stocks, and you could say, okay, I'm going to make a portfolio out of that. So if you have access to the ETF subscription, you're able to do all this. Or you can say see all stocks, and you can go here. Again, we're looking at projected 2026 ROE, and go from the highest to the lowest. And you look at these stocks and you say which have the highest ROEs, but did they have highest ROEs in the preceding last year, 2025, and then the 3-year ROE and the 5-year ROE. And you can see, though, even so, though some of them are having such huge returns or huge ROEs for 2026, they're coming off negative losses for last year, and even in some cases the year before and the year before that. So in other words, they're coming back from almost nothing is what you see. So you want to be able to go to some of the stocks. We can look at American Tower. Now, this is a REIT, so we don't care for REITs, but it has had a nice ROE, rising ROE. So we look at stocks like that. Let's go down here to Spotify, Broadcom. Yeah, let's look at Broadcom right in here, and we can see it has had nice high ROEs. So we go through these stocks and we look at each one. So let's look at Broadcom here, and we'll go into the individual stock, and then we want to see the net income rising all along. We want to see consistently rising, if possible, for the most part, ROE, and we can see that it looks pretty good. So 5-year net income 61%, which is phenomenal, and revenue growth 16.6%, which is 2.5 times more than that of the average stock. So we go a little bit closer than picking the top 5, but you can do that, and that's how the original research was done. Merely by finding the ones with the highest ROE, and I use 3 years. I like to go to 3-year ROE and go from the highest to the lowest, and then we'll see if those stocks have good ROEs for the next year. So we look at some of these stocks and we say, okay, did it have a good ROE for the previous 2 years? And we see which ones did, and those could be contenders for a portfolio that you make up yourself. But don't forget to look into each one of them, and let's look into this Energy Partners Limited Partnership. And what bothers us is that there's some years where it had a negative clean surplus ROE, so we don't even talk about that. We don't even look about it. We just go to the next stock. So, folks, that's how you do it. So that's our ETF for the week, the Finance ETF. So we've had a pretty good week. Markets are just about at new highs, just coming off new highs, and it's been a good couple of weeks in here, or 3 weeks, 4 weeks, and so we're doing really well in all the portfolios. They're all doing well. So, folks, you go out, you enjoy the weekend, have a great weekend, stay safe, and we'll see you back here in a couple of days.